Well, it took 200 years from the founding of this country to get to $1 trillion debt. Now we're at 35 trillion in just a few short years after that. How does that happen? Well, that's a compounding of interest. It's become a giant casino. And at some point, someone's going to say, I'm going to exit this game. I'm going to get out of this casino. I'm leaving the blackjack table. I'm going to go over to the precious metals table. I think I'm going to go where it's stable. And so I look at it as a way to find out if gold or silver, one's undervalued relative to the other one. And the mean over the last 50 years or so has probably been somewhere around between 40 and 50. So right now it's above 80. So if it just goes back to the mean of recent times, that suggests that silver will actually outperform gold 2-1. So if gold goes up by 200%, that would imply that silver would go 400%.
Hello and welcome to the Achieving Alpha podcast. My name is Steven and I am the host of the show. Today, I'm delighted to be joined by David Morgan. He is the founder of the Morgan Report, and he is also an expert in the precious metals sector. So, real pleasure to have you on the podcast, David. How are you today?
Stephen, I'm well, thank you.
Yeah, nice day out there in Washington.
A little rainy.
One of those days, yeah? Okay. Excellent. All right. Well, it's a real pleasure to have you on the show today. I'm really looking forward to our discussion. We're going to be digging in much deeper into both the economy as well as precious metals, digging into gold and also to silver. As it's your first time on the podcast, I would just like to ask you if you could please introduce yourself and a little bit about your career so far to date.
Oh, certainly. I think that if you want an in-depth look, you can go to the website, themorganreport.com, and there's a bunch of tabs across the top. Just hit the About tab. My full CV or biography is there. And also there's a movie there called The Four Horsemen Film, which was actually filmed in London. I don't know if all the interviews were done in London. I know a great deal of them were. And it's a classic. It's over 10 years old now, Stephen, but it goes through basically the big picture and what's going on with the economy on a global basis and how this is cyclical, how it goes from, there's really four stages: the age of the pioneer, frontiersman, and how it progresses through. And these cycles repeat over and over again. A little off track. Basically, I degreed engineer. Business was always my favorite place to be. Go back to school, got a master's in finance, and I started working on the internet about 25 years ago or so, 1990. Before that, I worked in the engineering field in the aerospace industry. And I say that's about it. I'm pretty well known. I was one of the first to write about silver on the internet, myself and Ted Butler, who's recently deceased. But Ted brought a lot of people in the silver market. I have, as well as many others, of course. But really, if you go back to those early days, 1998, 1999, it was, best to my knowledge, there's really only two people writing about silver in those early days. And that was myself and Mr. Butler.
Okay. All right, great. A lot of experience there. I wanted to ask you as well, because I know that you were the founder of the Morgan Report. Can you just let me know what inspired you to set that up and what you're trying to do with that?
Well, one of the things that really intrigued me when I was still working as an engineer, I caught on to how the banking system worked. I was kind of obsessed about how the whole monetary system works. So I did a lot of self-study, started at a very early age. And as I progressed to my own kind of discovery, I just kept learning more and more. And one of the guys got me went to an investment conference, gave me the cassette tapes, that shows my age, how long ago it was. And I was listening to these lectures, and one of the guys really impressed me, speaking about the economy. It's kind of a gold show. It was resource oriented, pretty much hard money, sound money, that type of thing. And it just really inspired me. I thought, God, that would be such a great way to make a living doing that. And so that's when I discovered the financial newsletter industry. And then actually my first job out of college in the aircraft industry, one of the test pilots was reading a newsletter. And I go, wow, there must be some industry. And this is way before the internet. I mean, these were actual physical letters in an envelope. So anyway, it fascinated me how you could get kind of some inside information on different stock tips and all that. So it fascinated me. So really something that I really aspired to do. And with the internet, it became easier than the old method of actually snail mailing. So I gave it a shot. And it was quite difficult in the beginning, but I made up my mind I was going to do it differently because I became a bit of a newsletter junkie. I subscribed to a lot of financial, and I saw that most of them were really not worth the paper they were printed on. So when I started my report, I wanted to make sure everybody made money. And because of that, knowing how the gold sector worked from experience, by that time I had several years, that I wasn't going to tout any of these what I call penny dreadfuls, these penny stocks that most people lose money in. And most people aren't really given enough information to make a sound decision because it's mostly an advertorial and really they really are hyped up, hyperbole all over the place. So when I started mine, I was going to do just basically producers, junior producers on up. And that served us very well. But as I started, I realized that there were so few junior companies in the very beginning when the cycle started in the early 2000s that out of maybe 1,000 companies that once existed, maybe 10 were left. Well, there's only 10 left out of 1,000 because those properties really had merit. So I actually did the best of my ability due diligence on those, and I actually picked more junior exploration companies that actually became mines than anybody else in the industry. And I'm not a geologist, so how do you do that? Or a mining engineer? Basically, common sense. Because when you get a 20-year bear market, and you're at the bottom, the only survivors are something that really are worth merit. So I still have some speculations. We treat them differently than almost all the other writers. So my main goal was to teach people how to weight a portfolio and make money in the sector with the greatest reward with the lowest risk. And we've held to that all the way through. Many people dropped out when the market got tough. We're still here. Two of our majors are making new highs as we speak recently. So I'm pretty satisfied. Certainly could have done better. Certainly there's mistakes I'd like to wish I hadn't made, but I'm honest about that. And what I do with the speculations is it's money you can afford to lose. So as long as you adhere to those principles, no one's really gotten hurt badly. Unfortunately, some of these smaller companies are just so enticing with their story and they might really move and look like they're on their way and then fail. It can be very disheartening at times, but that's not what I focus on. I focus on big money and big companies, companies that continually do the best for the bluest of the blue chips. And that's basically the royalty and streaming companies. And again, we've been very successful, much more than many others in the industry.
Yeah. Yeah, I think there's a lot of newsletters out there, but it's really great that yours is really actionable and it's something that you can follow along very closely to rather than just nuggets of information. So it's a really great report. Okay, and so far this year, gold has been doing extremely well. We've just seen new all-time highs recently. I think it's up about 33% or something on a year-to-date basis. Silver is also up a little bit more than gold this year. It's done particularly well. What do you think has been driving the performance so far this year, David?
Well, gold is really a barometer of the economy, and it's really a barometer of the global economy. So if you have a barometer out there and it's signaling bad weather ahead, you can look out your window and say, well, it's clear, the sun's out, what this thing's talking about? But it's showing you what's coming down the what's coming in the future. And that's what gold does. So what gold's forecasting for everybody is that we have some tough times ahead in the global economy. And of course that's true, and we're going to talk about it later. But that's what gold's forecasting. So the smart money has already moved into gold, and that's the central banks. And central banks don't really care about the price. They can print what they need to buy all the gold they want. They're basically loading it up on gold because they see the storm ahead and they want to make sure that they have enough ballast in the ship to ride out the storm. That may be a corny analogy, but that's really what they're doing. So they've added to their balance sheet in gold. It became a tier one asset after Basel III. And I think if you really were able to get a one-on-one with one of the central bankers and do it anonymously, where you didn't quote them in public, some of them would probably admit that gold is the monetary hitching post of the universe. And in the worst of conditions, if they had to, they could go back to some pseudo gold standard or some tie to gold. But I don't think they'll do that initially. I think the new monetary system that's really been developed in China is what the central banking system on a global basis wants to put out for the rest of the world, which of course has no gold backing. But again, if they need it, it's there for them to utilize.
You said gold is obviously a barometer of the health of the economy. What are the main fears that you can see why everybody's fearful at the moment of the economy? Why that drives gold?
Well, there's several. One is political instability. And of course, that goes into geopolitics and the war efforts through Ukraine, the Middle East, what's happened in other areas. And this is not going away, and it seems to be increasing rather than decreasing. You have supply issues throughout a lot of the world with not only shipping problems that keep coming up, but you also have disruptions in supply with wheat, some of the foodstuffs. You also have weather patterns that are also changing the ability to not only grow food, but to store it. In some cases, some of these flooded areas have wiped out huge silos that had foodstuffs that were stored in there that have now been flooded and they're useless. So there's a shrinkage in the or contraction in the overall global economic system from a physical agricultural aspect. And it's also spilled over into some of the manufacturing and other things because we're really on a global deglobalization, believe it or not, in some areas. And the nation states start looking in their own borders rather than outside of them, rather than how much more we can affect a trading partner. It's like, how much food are we going to have for our own nation state? And then, of course, with the AI and all the things on the technological side that are advancing faster and faster all the time, you have worry about what is my job going to be taken over by AI in the near future. And lastly, of course, inflation is pervasive. It's everywhere all the time. And it just creeps, and then it starts to accelerate in some areas. I'm not talking about necessarily the hyperinflations like Argentina and many others, Venezuela, but I'm talking about even within the advanced economies like the United States and Canada, where the average person is starting to worry about what's my dollar worth? What's the Canadian dollar worth? Am I going to be able to afford the increase in fill in the blank? My rent's gone up, my insurance has gone up, my food has gone up, my petrol price has gone up. What other bill? Oh, my utilities are going up. My library card's going up. I mean, everything. So that starts to weigh heavily on it. So it's a combination of a lot of things. From the macro picture, it's really a big picture, meaning what I just said. So many things are contracting, and that's starting to push prices higher, as well as the disparity, let's say, between what the working class was getting as a stable wage back in the 60s compared to what they're getting now. They're making a lot more much bigger number, but it doesn't have the same value as the money did obviously years ago.
And David, what's your view on the inflation data that's out there? Obviously, the CPI data. Some things it covers, some things it doesn't cover. And obviously, every consumer has a different inflation basket, right? Depending on what their lifestyle is like. Do you think that the data that's provided to everybody, do you think it's very accurate on what's happening in the economy, or do you think that it's not so accurate compared with what everybody's normal inflation costs are?
Well, it's inaccurate, it's understated. I mean, first of all, the two things humans need the most, food and energy, aren't in it. So, I mean, everybody needs transportation, or if they don't drive to work, they need to heat their house. That's energy, or use electricity. That's energy. So, it's preposterous to take out food and energy. We all need to eat, or at least last time I checked. So, that's number one. Number two is the metrics that they use to calculate the CPI or the PPI has been skewed over the years. If you go back to my friend John Williams that runs shadowstats.com, and he does the analysis the same way it was done in 1980, what you'll find is it's really understated, that the true inflation rate based on those metrics is far higher than what the government states. Excuse me. Now, There's reasons for that. One is the lower the inflation that they can broadcast, or the Ministry of Truth puts out, the better it is for the bond market to have lower rates, which means that the government, when it refinances the debt, has a lower interest payment. You want a lower credit card payment based on the interest rate than a higher one. So that's one of the reasons. The other one is just kind of to quell the public. But you can only fool them for so long. I mean, if they see the food prices are up 40%, you're telling them it's only up 8%. People aren't stupid. They're going to say, this is bogus, this is propaganda, it's not truthful, etc. So that's a problem. That's a problem for the political class to come into a relationship. And then the hedonic indexing, and there's something I've thought about. I've kind of readjusted my thoughts on those. I mean, basically, if you want to eat a steak sandwich, well, steak's gone up too much, so they hedonically say, well, really, a burrito's just as good. We'll substitute a burrito for a steak sandwich, and that way keep the inflation price rate down because a burrito costs less than a steak sandwich. But there are places where it actually kind of makes sense. I mean, an iPhone that costs the same, that does a lot more than one 10 years ago, you could adjust it. And I think there's some validity to that. But we're getting into the kind of the minuscule things when you go due to the top level, hardcore, what you eat, what you use in energy, how much healthcare costs, what insurance costs are, what it costs to buy a home, all those things. It's really understated to the true inflation.
Yeah, I think there are a lot of people struggling out there. And as you said, if people can't afford to do things, they might just substitute for a cheaper thing, right? So instead of eating out at a fancy restaurant, they might take their family out to a fast food place or somewhere that's a lot cheaper. Yeah, so that's totally understandable. Okay, and we've seen recently that a lot of countries, especially China, India, and some of the BRIC countries as well, have been stockpiling gold. What is some of the reasons why those countries in particular are rapidly increasing the amount of gold that they have on hand?
Well, again, it's the money of last resort, but really on top of that, I think that the situation with the U.S. Kicking Russia out of the SWIFT system, these other countries took note of that. They go, gee whiz, what are we going to do? What if America gets mad with our foreign policy? What if they kick us out of the SWIFT system? At least we have gold, which is international, 24-hour, 7-day a week market, more or less. And it's something that you can rely upon. Doesn't have any currency problems that you have with having to convert the rupee into the US dollar to pay off a dollar debt or something like that. So I think it's two things. I think it's one, to make sure that they've got a reserve asset that's the best of all time. And secondly, just in case the geopolitical thing gets heated up more and more, that they have a backup plan with real money that they can rely upon.
Yeah, I think that's an understated thing, actually, especially for the countries that might be either under sanctions or having trouble with the US, potentially not having the US dollar be weaponized against them, etc. So I can see why that they're gathering more gold, but they're also potentially looking at dealing in different currency baskets as well, right? Yeah. Okay. And I also wanted to ask you about the gold to silver ratio. Can you just explain a little bit, first of all, about the gold to silver ratio and what it's showing at the moment in this current time?
Gold silver ratio is the price of gold divided by the price of silver. And what it tells you is how many ounces of silver it takes to buy 1 ounce of gold. And historically, it's been around 20 to 1 or lower. The average is probably around 15 to 1 or so. And that's true for 700, 800 years, maybe almost 1,000 years. It's held that ratio. And then it was when silver's demonetized, the end of the 1800s, 1873 to be exact, or 72, 73. The ratio got as high as 125 a couple of times. And so silver was really demonetized the ratio changed drastically. And so I look at it as a way to find out if gold or silver, one's undervalued relative to the other one. And the mean over the last 50 years or so has probably been somewhere around between 40 and 50, maybe. I'd have to look. But so right now it's above 80. So if it just goes back to the mean of recent times, that suggests that silver will actually outperform gold 2 to 1. So if gold goes up by 200%, that would imply that silver would go up 400% or 10% and 20%. Take your numbers. I think that's going to be achieved. I think that as gold gets priced higher and higher in dollars, because the dollar's failing more and more, it's becoming debased further. And I don't know the exact point. It's a different point for everyone. But once it's at 3,000, 3,500, 4,000, people that are catching on to the fiat money collapse will say, God, I love to own gold, but we only have 8,000 bucks in savings. I don't want to come home with 2 gold coins. I think I'll buy silver ratio might be at 60 to 1 at that point, but I get a lot more for my dollars for my fiat. I think I'll buy silver. So I think that will have something to do with the ratio closing. And the other one is just how much silver really remains in investment form. And there really isn't that much. And I think that's something that most people that are out there in the general public know very little to nothing about. But if you actually study the market, you'll find the investment grade silver is about on par with investment grade gold, meaning that there's probably 3 billion ounces or so in commercial bar form and bags in small bars for investors. So that's not a very big supply when you consider how many trillions of dollars are out there floating around the world.
Yeah. Okay. And usually we see when the markets are bullish in precious metals, we see gold and silver run. Obviously, silver has a higher beta than gold usually, and we've seen gold and silver perform fairly similar. I think silver's a bit up on what gold is year to date. Do you think that's just the where we are in the current cycle, where gold might run earlier and then silver kind of catches up later with the gains, or do you think it's something that's fundamentally happened in the economy that's driven that?
Yeah, that's a great question. And I think it's the former. I think that gold has definitely led the way. Gold is establishment. I mean, most people don't think of it that way because it's never advertised on the financial channels. A financial planner is never going to put you into gold. You go get a money manager, they're not going to put you into gold. Your insurance agent isn't going to tell you about gold. But yet, the big money knows about gold. And the big wealth managers, I mean, you have a portfolio of 10 million or more, they're probably going to put some gold into your portfolio. But it still is held by the central banks, as we discussed earlier, but silver's been demonetized. So no one really talks about having silver as a safe haven asset outside of independent thinkers, mavericks, people that think on their own, critically think. These are people that really think about the silver market. And because of that, you don't have the juice in the market with some central bank wanting to buy silver as a reserve asset. Although Russia recently announced they're going to buy silver, platinum, and palladium, and more or less the article I read indicated more on strategic purposes rather than on monetary purposes. But silver doesn't ever ask, are you buying me for monetary purposes or industrial reasons? Doesn't care. A purchase is a purchase, a demand is a demand. It will be investment demand that will push the silver market higher because the amount of silver that's available, mining and recycling, does satisfy the industrial demand by itself. But the one off is the amount of investment demand or safe haven demand that will go into the silver market.
Can you see that as a trend? You mentioned obviously Russia recently bought it. Can you see it as a trend moving forward that more nation states will buy silver to store as well as gold?
Absolutely. There's a couple of reasons. One, it is a safe haven asset, even though a lot of people will pound their fists that it's not a monetary asset. Really doesn't have to be used as one. I mean, rhodium did quite a jump, and it's certainly not a monetary asset. Platinum, palladium classically fit all the requirements to be a classical money, but no one thinks of them as money. But regardless, there's so much industrial demand that that could start a trend. So the industrial demand on silver could get to the point where people start to warehouse it to make sure that they keep their businesses going. And because of that fact, another businesses are, wait a minute, look what Apple's doing. Well, look what Samsung's done. Look what Tesla just did. Oh my goodness. 3M, hey, call a logistics guy and let's warehouse 6 months worth of silver. And once that trend begins, it'll be hard to stop because, as I said earlier, there really isn't that much silver above ground in that 999 form that's required for industry or monetary purposes.
Yeah, definitely not. Okay, all right. I see already a recent tweet that you retweeted. I don't think you composed it, but you retweeted it recently about the potential for a short squeeze in silver. Do you see that as a possibility that there might be a short squeeze in silver? And what would be the reasons behind a short squeeze?
Short squeeze is it's because there's a lot more buyers than sellers, and the demand is so great that the market can't meet it without pushing prices far higher. There's a friend of mine named Matt Watson, and Matt does great work in all the metals. He looks, and I look at a lot of the resource metals. I mean, Morgan Report does copper, lithium, cobalt, the rare earth elements, a lot of any resource, but Matt goes into like the exotics, like rhodium, iridium, some of these I can't even pronounce. But he looked at silver and he has a low case and a high case. And what he shows from basically 3 years ago, going out at least a decade or more, is that the above ground stockpile is the only place to meet supply and demand. In other words, demand is well above what's mined and recycled for the next decade, at least. So you've got 10 years where the only way to satisfy the industrial and investment demand is to eat the above ground stockpile. And that's being eaten away at least 200 million ounces a year. Where I disagree with him is he shows a constant demand in monetary demand or investment demand. And I disagree. I think as we progress down this road to fiat fiefdom, where all fiat fails and more and more people wake up and the stock market's not doing well, the bond market can't be controlled, housing market isn't doing well, where are you going to go? You're going to call Ghostbusters, you're going to call up your broker and you're going to buy some gold and silver. So there's a lot of money outside of the gold and silver space in bonds, in stocks, in real estate that will get moved into the this small asset class. So I think that even though we're eating up based on the current projection of maybe 200, 250 million ounces per year, it could easily go to 4 or 500 a year, in which case you could, in theory, run out of the above ground stockpile to meet the demand within a few years. So, yeah, there definitely could be a short squeeze in silver. In fact, if his projections are correct, and at this point in time, I agree with them. I mean, there could be a technological change that skews this data, but all things remaining the way they are right now, it's almost guaranteed to have a short squeeze at some point.
Yeah, it's just when that will be, you can never tell, right?
Yeah, you can project it. I mean, based on if his chart's right, his low case, it would be probably 7 years from now. But I think that's optimistic for the fiat system. I think is again, if the demand goes strong, I mean, like in 2020, there was 320 million ounces of silver bought for investment purposes. That was a one-off. That was a huge year for the for the investment side from big professional money that came into it. But and a lot of that went back out of the ETPs. But who's to say it won't come again? Especially when you think there's $6 trillion kind of sitting on the sidelines in more or less money market funds, sloshing around without a home. You take 2% of that, that's 60 billion. The silver market on an annual basis is 30 billion. So 60 billion is 2 years annual silver supply, everything mined on the planet plus everything recycled on the planet. and that's only 1% of the money. Don't you think in the next financial crisis, at least 1% of that money will move into the silver market? If it did, that 60 billion represents 2 years worth of silver. So where do you think the price would go?
A lot higher. Okay, and obviously silver has not just as a kind of a store of value, but also has industrial uses, and I think growing industrial uses as well. How can you see silver developing as an industrial metal? And are there any new use cases that you're seeing for silver that might drive demand?
Well, the big driver that's never talked about, and you can't really get data on, is how much silver is used for military purposes. And it's never really reported. I mean, Haney and Hardman years ago used to report on it slightly, but that's publication's probably 40 years old. I'd have to look. I mean, they aren't even in business anymore, but they used to be one of the main refiners and they put out an annual report. Of course, I read it. But there's the military use, but the batteries is also out there. And silver batteries are, much better than lithium or any other thing, but they're more costly because they use silver. But there are applications in military and other places. Samsung recently did an article. It's a little ahead of its time. They're still really working on the technology, but it talked about EV using a Samsung silver-based battery and how superior it is to a lithium-based battery. So there's always new uses. I think the best way to explain it is this. Stephen, if you go back 25 years to the year 2000, 35% of the market was industrial. Go to today, 2024, 24, 25 years later, and it's 60%. So the market's nearly doubled in 25 years for industrial demand. And in that time, the silver supplies went from 550 million ounces being mined to 850 million ounces being mined. So if you do the arithmetic on that and it kept the supply constant, which it's not, it's gone up 300 million ounces. It's gone from 35% to 60. If you kept it at 550, it'd be more like 80%. So it's almost tripled as far as the 2000 statistic for how much is used for industry. So what you can determine is that trend in motion continues till it actually stops. And I don't think see it stopping. I think there'll be more and more uses for silver in nanotech, biotech, electronics, supercomputers, more handheld devices, and everything else. So what I'm saying is that trend is still in motion. So again, that goes back to the silver squeeze. If it becomes 70% of the market, and of course there are areas that could be curtailed. I mean, silverware is only about 4 or 5% of the market. So if silverware went away, would that really disrupt the market? Yeah, it might have some effect for a year or two, perhaps. Silver jewelry, yeah, that's one that's kind of a one off. But what's interesting about silver jewelry is when gold gets really expensive, they sell more silver jewelry. So, or they start degrading gold and they start going from 24 karat to 18 karat to 14 karat, which is silver mixed with gold. So really, that's a kind of a tricky one. So you say, oh, silver jewelry. No, actually, silver jewelry does pretty good when the prices go higher because gold keeps going.
Yeah. And I guess it would only take a slight disruption with mining silver and those increased demand for silver to cause that imbalance, right? And potentially cause a short squeeze.
And what you said earlier, where these nation states are looking at what they have and say, wait a minute, we're the second largest miner of silver in the world. We need it for our solar panels, or we need it for our infrastructure, or we don't think it's priced fairly, or they're putting tariffs on everything else. All right, if you want to buy our silver, it's going to cost you this much more, or whatever. So I think, again, as we get this contraction, in the global economy and the nation states are looking after themselves more and more, there could be disruptions, not so much for mining, which is a valid argument. I mean, there could be problems for labor, there could be weather issues, there could be many things that mining's a tough business. Something could go wrong. But it could also be a political issue where, you know what, we're not exporting our silver. Or if we do export it, there's an export tax. You pay it or you don't. Otherwise, this country will pay it. This other country doesn't, okay, then they get the silver.
Okay. And you're clearly bullish on gold and silver, but which one do you think out of the two has the most potential for long-term gains? Which one are you most bullish on?
For gold, it's the most stable. I mean, if you're older, you're in retirement or nearing retirement, I always tell people to favor gold over silver. It is, as I said earlier, it's really an establishment metal. I mean, the banks don't hold it because they think it's shiny. They hold it for a monetary purpose. Silver, on the other hand, has more potential. I definitely believe that, but it's much more volatile than gold. I think no matter what age you are, you should have both. But I think the older you get, you should favor gold over silver in your portfolio. If you're young and aggressive, if you're in your 20s or 30s, and you've got a long time horizon for legacy wealth passing on to your kids and your grandkids, I think silver would definitely be the place to be.
Yeah. Yeah, I can see that. Definitely has a little bit more volatility, but obviously more upside as well.
Correct.
Okay. All right. And we've got the election coming up. So we're filming this a couple of days before the election. The result may be out by the time this episode goes out. But do you think it makes a difference to gold and silver and to gold and silver prices who gets elected, whether either party gets elected, or do you think it would just be a very similar story?
I think it's a pretty similar story. It's based really on the economy. It's the economy stupid, as they said during the Clinton years. But potentially, gold has done better under a Democratic administration than a Republican one. I mean, those are the statistics that are factual. But this time around, I don't think it makes much difference.
Okay. I suppose it will depend on which party, which pumps more global M into the money supply or not, right? And who stimulates the economy the most moving forward.
The money supply does have an effect. I mean, that is what the definition of inflation by the Austrian school. But really, it's fear and it's uncertainty. I mean, as we talked about earlier, if stocks aren't doing well, real estate isn't doing well, then where do you go? And there aren't a lot of other asset classes to go to. And that's reasons why you would see a huge push in prices because it's such a small market. As I said earlier, if 1% of just the money sitting out there, I'm not talking about people selling stocks and moving into gold. I'm just talking about money sitting there thinking, what should I do? And well, I don't want to go into real estate. I don't want to go in the stock market. I don't understand the bond market, or I don't want to be in the bond market. What about precious metals? It doesn't take a big amount to move a small market. So a market like silver could be moved drastically with not a whole lot of money going into it relative to what's out
Yeah. Okay. And we've seen interest rates come down at the last FOMC meeting. I think they took them down 50 basis points. And it is expected that they'll decrease those interest rates again at the next meeting and beyond. Um, do you think that we will continue to see those interest rate cuts all the way until they're back to kind of zero? Or do you think that just like they were previously before? Or do you think that they might do it much more gradually?
there. Well, I think gradually is probably their plan, but the market can take over. I mean, the Fed sets a discount window, but market forces, even though the Fed has been really good at manipulating the market by buying the long end and doing different tricks, Operation Twist, and all of these things they've come up with because they know how the money markets work, and being able to basically control the yield curve pretty much. But there is a point where they really can't control it. I mean, basically, for other people, nations to take on more US debt, they have to trust it. And no one really trusts it. They just trust that their computer algorithm is smart enough to know what side to be on, long or short, when there's a fluctuation in interest rates or currency fluctuations. So it's become a giant casino. And at some point, someone's going to say, I'm going to exit this game. I'm going to get out of this casino. I'm leaving the blackjack table. I'm going to go over to the precious metals table. I think I'm going to go where it's stable. So there's a lot to what I said and what you indicated, but I do think that there could be, in fact, I think there will be a point in time where interest rates go opposite of what the Fed wants just because of market forces.
Yeah, yeah, especially if we see an increase again in inflation. Inflation has been coming down over the last year or so, but before that, we had uh, more historically high levels of inflation than we had previously. Do you expect inflation to be kind of stickier for longer? As in, we're having sometimes have these spikes of inflation that come around, or do you think that, as the Fed like to put it, the battle of inflation is they're winning the battle of inflation?
No, I think it'll continue to increase. It's more of a psychological issue at one point than a pricing issue. I mean, you can have price issues because of shortages. You have price issues because of a demand anomaly. I mean, everyone has to have an iPhone, so they bid up the price. But really, what happens is people start to feel like their wages aren't keeping up. So, independence, the small business person, has the advantage of being able to set their own prices. So, if the baker that runs a bakery shop has a plumber come out and fix his plumbing, and realizes the last time I had a plumber out, this cost for the same repair is 300% greater. He's going to start thinking, well, you know what? My prices on my baked goods in that same time frame have only gone up 200%. Hell, I'm raising my prices. I got to pay for the plumber next time he comes out. So you kind of get this wage price push where you start seeing wages, and then you see unions will start demanding higher wages. So it's not something that goes away easily. Once you get the mindset that my dollar isn't buying as much, my rupee isn't buying as much, my peso isn't buying as much, and a lot of these countries know that all the time. But well, let's just take the U.S. dollar. If inflation's running around 2 or 3%, and they're told that day after day, and they really don't see much price increase in food or fuel, they might see, oh, their house insurance went up, but nothing, their life insurance didn't, or whatever. So, in other words, they see some prices going up, but they don't seem like they're outrageous. Yeah, people just kind of shrug their shoulders. "Ah, I got a 4% raise at work. I'm good." But then when prices start going up, they're told they're up 9%, they're really up 30%. That's hard to not look at. So, once they get to those levels, then people start to get the inflation psychology and they start to take action. And that action's hard to stop, even though the government says it's coming down. And maybe food prices have come down or stabilized, let's say. They really don't come down. They could, but most of the time they just stabilize. So, all right, bread's about the same, milk's about the same, eggs are about the same. They're much higher than they used to be, but they're not going up anymore. They're the same price for the last 3 months. Nonetheless, that wage push is still in the background because it's up 30%, not 8%. People are still thinking, I need to get a raise. I can't go out to eat anymore. Or we're going to go out to eat once a month. We used to go out every weekend. The only way I'm going to get back to the lifestyle I want is to demand higher wages. I'm going to talk to my boss about getting a raise. So you get that push on prices, or I should say wages. And that just, again, I would say it doesn't go away, but it certainly remains a factor in the whole equation. And most people don't talk about that psychology of needing to have a higher wage just to make ends meet.
And as we've seen before in economies before, we've seen that it can happen very quickly as well, inflation, right? If something changes to the supply demand dynamics, things can change very quickly. And then the Fed would have to go on the defensive rather than the offensive of reducing rates.
Exactly.
Okay. And lastly, on government debt, I understand the latest numbers are about 35 trillion, might even be more than that now, the amount of debt that the US government has. And I think there's about $1 trillion of debt repayments on that as well. Staggeringly high number. I guess I really wanted to ask you is how can that continue to go up indefinitely? I mean, surely there's got to be a stage at some stage where there's got to be some type of great financial reset, something along those lines.
Well, well, it can't. I mean, it's a situation where it's something they never teach you in finance school. And I have a degree in finance, but If you took the thought experiment and God gave Jesus one penny at birth and it compounded at 2%, that 2% inflation number. So if you took 1 cent compounded at 2% annually till now, it'd be 2.2 trillion, which would be the equivalent of 6 planet Earths. So what that proves is that you cannot have compounding inflation forever. It's impossible. And that's why once we get to that exponential function where the debt starts compounding at such a huge rate, even at 2%, which sounds very low. I mean, but if it keeps going year after year for that many years, of course, it's absolutely impossible. So this is something that no one really questions in the stock or bond markets. They just say, put your money to work. You're going to get it. You're going to get a yield of whatever on the 10-year bond or the 30-year. And that's all factored into it. I mean, we do it when we analyze a mining stock. We take the true value of money or the adjusted inflation, and then we project out the return of capitalism, what the cost of money is. I mean, everybody does it, and it's not wrong in a short term. And that's why I've thought about it for a long time. And I'm not saying I'm right, but it does make me think that that might be why there was that 50-year jubilee in the Bible, because you can compound for about 50 years, and that's about the rough time frame where it starts to get out of hand. So if you reset it every 50 years, you could have usury and let money compound and it doesn't get so out of whack. But again, you go to my thought experiment and that one penny, I mean, becomes astronomically a huge number over time. So I think there's something that has to be corrected. There's lots of things that have to be corrected in the monetary system, but no one ever questions the usury part. It has been questioned in the past. Let me restate that. And of course, Islamic law, I mean, you can't have usury. So, and in some parts of the Bible, people claim you can't have usury. But it is something to contemplate because it cannot go indefinitely. And we never account for that. We just keep saying, well, here we are at these $1 trillion debts. Well, it took 200 years from the founding of this country to get to $1 trillion debt. Now we're at 35 trillion in just a few short years after that. How does that happen? Well, that's a compounding of interest.
Yeah. And it'd be quite interesting to see if there ever was a global reset, which obviously it is likely to happen sometime in the future. We don't know when it will be. What can you see the new system being? Do you see it going back to being the gold standard again, or a potentially a new type of system? What would be your best guess?
Well, I'm going to be speaking about that at the New Orleans conference down in New Orleans, 20th, 21st, and 22nd of this month. And what is proposed is basically the Chinese system on a global basis. I mean, basically, where you have all digital money, you don't have any cash, and it's also based on your credit score, your social credit score. So, how good a citizen you are. That's basically what they want. Now, whether or not to be able to implement, they meaning the globalist bankers, whether or not that actually takes place or not remains to be determined. And it may not be as easy to implement as they may believe. It's possible that they could try to implement that and it fails or doesn't have great success. And the bankers regroup and come back with some kind of tie to gold to make it more palatable for the population to put trust back into the reset. So, I mean, the people that messed up the system entirely and demand a reset or make it so that we demand a reset are the ones that were responsible making this mess in the first place. Many people that can critically think aren't going to be really that anxious to jump on board their new system, but they may make it where you don't really have a lot of choice. If you do have choice, there's enough resistance, and I think they will implement gold in some way, shape, or form to again regain confidence in the system. So school's out on that. We don't know for sure. We know what they want. We don't know if it'll succeed or not.
Yeah. You need something to restore the checks and balances that have gone off since fiat came. But it is quite a scary thought to think that there might be some type of system where they're tracking all your transactions and your behavior and It's a pretty scary thought.
Definitely.
Okay. All right. Well, thanks, David. Also, if people want to find out more about you, what are some of the resources where they can find out more about you and also find out more about the Morgan Report?
The easiest thing to do is just go to the main website, themorganreport.com, or just Google my name, David Morgan Silver. If you just put in David Morgan and the word silver, you'll get a lot of links to a lot of different places. But the main website has all the icons for the Facebook, LinkedIn, YouTube, and Twitter. I'm pretty popular on Twitter. I've got over 100,000 followers on Twitter. So that's probably the best place to go for free. Go to the website, themorganreport.com, go to the About page, watch that film, the Four Horsemen film, and also go to the blog. Most of these public discussions I do are on our blog site, and that's for free. And also, we have a free newsletter, which you can sign up for. I do a weekly perspective for those members and also post other things. Sometimes we get a discount, say a discount, but a lower premium on gold and silver coins, that type of thing. Some health products that I use personally that I think are worth investigating. But it's a good, both a free and a paid service.
All right. Well, excellent. Thank you very much for your time today, David. I really enjoyed the discussion. I think the audience will get a lot from the discussion that we had and learn a lot more about the gold and silver market. There's a lot more questions I could have asked you, but I think I'll save them for next time.
All right. Very good. Thank you.
So I really appreciate your time, and I'll leave all the links to about you in the description below. Okay. Thanks so much, David.
You're welcome.